Let's start with Toll Brothers. Fourth quarter profit up 62%. That's the headline. And if that was the only thing that mattered, then you'd be very confused by the fact that the stock was down. The stock's not down as much as it was. It's down about 1.5% right now. As we came into the studio, it was down a bit more earlier. When you look at what's going on with Toll Brothers, what do you see?
Well, I think we're looking at the housing market in general and a smaller part of that housing market, the kind of niche, high-end, very expensive housing market. So I think the reason why we're seeing that now small decline, what was a very large decline, is just because of the fact that, there was the first fall in quarterly orders in 4 years. So they're hit by those rising interest rates, homes now not as affordable as they once were for the average person, at least. And so, while their backlogs and deliveries are still very high, there's now a little bit of investor fear about whether or not that's going to be continued for the next few years.
And some of that fear was touched on by Toll Brothers itself in their statement. And I'll just quote directly from the earnings release. In November, we saw the market soften further, which we attribute to the cumulative impact of rising interest rates and the effect of buyer sentiment of well-publicized and the effect on buyer sentiment of well-publicized reports of a housing slowdown. So kudos to whoever on the communications team at Toll Brothers said, let's use the tried and true playbook of blaming the media. There's a little bit of blaming the media when it comes to that, but to your point, it would be, it would just be crazy to ignore the reality.
Yeah. And, you can blame the media all you want, but ultimately home building is still one of the leading indicators of a change in a business cycle. And so it's natural for when people see these houses stop to get built, construction slowing down, to be a little bit afraid because it is that leading indicator. So I think it's kind of silly to push it back on the media and investors in particular, especially because investor sentiment, while you can scoff at it all you want, does cause recessions, does cause economic turndown, and does affect your company. So it's kind of interesting to see that dichotomy between the way he acts or the way their PR people act and what's actually happening in the market.
As an investor, is the home builders as a group, is that a way that you're interested to invest into the housing market, or are there other ways? Because it seems like for anyone who's looking at the housing market as an investor and thinking, okay, this is a huge industry, there are a lot of ways to invest in it. It seems like investing directly in the Toll Brothers of the world is sort of an intermediate level of difficulty.
I would agree with that. So you have people who are really bullish on real estate, who like to get in on the ground level of real estate. People who, might buy into something like Toll Brothers, or people who buy into companies that maybe own a lot of their stores. So they own a lot of real estate, but don't act in real estate directly. So there's lots of different ways to get involved. For me as an investor, it's important to remember two things. The first being, I personally, and I think everyone here at The Fool, has a very long time frame that they're investing for. And you also have to be aware of the economic conditions of when you're investing. So, we are looking at a slowdown in the housing market. And while there might be a pullback sometime in the future, I think that's inevitable. Business cycles are a natural thing that happens. If you're a long-term investor, hopefully you're aware of that and you're not going to panic when that fall does inevitably come.